Welcome to another Back and Forth with Becker and Orr. Kevin and I are ready to go. Lots of topics and see all of them on the bottom, including the lead-off topic. Have we seen the market bottom? We're going to get into that. You definitely want to stick around.
Yeah, as Clint mentioned, there's a ton of topics today. Maverick, we're talking about World Juniors, buy in July, and of course, we're going to deal with the bottom. But first, if you want more information on this or you want to see any of the other videos we've done, please subscribe to our YouTube channel. You can go there, lots of great content. You'll love every minute of it. By the way, you can also like us on Facebook, or most importantly, please visit our website at beckerorr.com. We have blogs, we have events, we have everything else that comes around that time. But today we are dealing with on Back and Forth. The first topic is bottom. What are we talking about when we mean bottom today, Clint?
As the market actually bottomed, we had significant rally in July after 6 months of carnage, essentially, in the Canadian, U.S., and really world markets. Have we seen the bottom? There's a few factors we can look at. I'm going to quickly pull up a chart so we have a visual here that can kind of go along with it to provide a little bit of data in the direction of a bottom. Now, reality says we don't really know until well after the fact. But what we're seeing on the screen here is a breadth thrust. You have two breadth thrust measures that are on the bottom there. We won't go through all the mathematics, but essentially when one of them triggers, you get a green zone there. And the growth in the green zone has been very significant. In fact, in the last 30 years, the bulk of the net gains have happened during those time periods. And lo and behold, one of them started at the end of July, signaling a positive step, some additional market breadth, what we call a breadth thrust. So there'd be one signal that says, hey, maybe what we saw in June was in fact the market bottom. What are your thoughts there, Kevin?
Yeah, I mean, it's definitely a positive aspect, and we've seen a few other ones. I mean, earnings for the second quarter have been better than expected from what most people figured. We did find out, it just happened on Wednesday, that U.S. inflation was lower than they had planned for the month. So these are all key signs saying that maybe we're coming around to that point. But again, there's always that option, is this just sort of a bear market bounce? And I mean, inflation is still high. Will it sustain this way for a while, or is it going down? Will rates continue to increase at some sort of rate? So yeah, I mean, there are market views there that this does say that we could be starting the new leg, but there's other options that say, well, maybe we just getting a little bit of a bounce beforehand. But I do think that we're if we haven't been at bottom, we've been very close to bottom, and there's probably more upside based on the charting that we've seen from there.
Yeah, and the leadership has also been what you'd want to see. Like it's the big tech companies that got beaten up that are actually rallying, that are kind of leading the charge, which would make sense if there was going to be more sustainable rally. Combine that with the breadth thrust, and you look at the overall market, like the S&P 500 kind of got over what was that 4,200 level, which was seen to be some significant resistance. It got above that, which is certainly a positive. So there's a few things pointing to say, hey, maybe there's a little more to this rally than the ones we've seen in the past. But of course, you never actually know until after the fact. But it's certainly leaning more positive than what we saw in April or what we saw in June. Like, this is definitely leaning far more positive than that. So a few indications that this could be a more sustainable rally than what we've had in the past.
Yes, I would say that's exactly where it is. So, I mean, we'll have to wait and see over the next number of months, and Canada does their inflation numbers next month. So we'll see how that North American market rallies and how it plays out for the rest of the world. But if we go from there, now we want to talk about Maverick, and we're not talking about the movie that used to came out with Mel Gibson many, many years ago. We're talking about Top Gun.
Top Gun, man,
that's the big one.
Yeah, the more recent one. Yes, and talking about rallies, people talking about rallies, movie theaters have been dead. They're definitely rallying. Yes. Movie theaters have done quite well despite the pandemic and all the fears that happened during the pandemic. We'll pull up this chart here. And I love the photo in the background, by the way, the popcorn, very nice touch. But this is taken from Wikipedia. It looks at domestic gross for movie theater, or for movies, pardon me. So this is just Canada and US, not global numbers, just domestic, Canada, US. And lo and behold, Top Gun, Maverick overtakes Titanic, now in the number 7 spot there, Kevin, $663 million, and it's still in theaters. So that tally can get even higher in the weeks ahead, but shows there's still some strength. If you have a big blockbuster, people are willing to go to the theater to watch it.
Yeah, they really, I mean, and that's the biggest factor, right? I mean, you took a movie that's been 3 years in the waiting, it was coming out 2019, and then all of a sudden 2020, or should I say 2020, and then it got shut down. So it didn't do 2020, not 2021, and finally get it in 2022. And everybody who's been anticipating it I mean, Rotten Tomatoes, everybody else gave it great reviews, and it has just been gangbusters ever since then. And yeah, you're right. I think that it will still overpass something else in the domestic market. But as you showed in that previous chart, Spider-Man is up there as well. So I think what it's stating is that people have been locked in for 2 years. They want to get out. The theater is a place you can go. It's fairly inexpensive. It's 2-3 hours out of your day that, you get to unwind from everything else. And I think we may see more and more of that coming in the next number of years, or even at the Christmas season when the next number of blockbusters come out.
Oh, absolutely. You know what it also says, Kevin? Look at this sheet again, this chart. The 2 movies from the pandemic that are in there, Spider-Man No Way Home, Top Gun Maverick. You know what sells? Nostalgia. You have to bring in some element of nostalgia. Top Gun Maverick, of course, the sequel from the blockbuster hit back in the 80s. Spider-Man No Way Home. They found a way to work in the Spider-Mans from prior generations. So a little bit of nostalgia, and that's the blockbuster smash right there. That seems to be the ticket right there to getting some big numbers.
Yeah, I'd say you're right there. And not only that, but if it's not there, sequel works as well. You've got more Mission Impossible, more John Wick coming up. So there are things that we're anticipating and see how it goes from there. But now that we've done with Maverick, let's go back to buy in July. Now, we have always talked about what is July going to look like? Should we be getting into the market or should we not be getting into the market? How does that play to the rest of the months over the course of the year? Clint, should we buy in July or should we just stay on the sidelines?
Yeah, when it comes to the Nasdaq, apparently we should absolutely be buying in July. I mean, the data is quite renowned there. This is seasonality data. It goes back 15 years, so you have to take that with a grain of salt. Every year doesn't have to be exactly like the seasonal trend. But what it shows you, and I'll pull this up so we can see it a little better, but it shows the seasonal trends for the last 15 years, specifically for that Nasdaq 100. And a box and whisker plot here, but essentially the line in the middle here that I'm noting with the cursor, if you're above that, it means it's positive. Below that, it's negative. The line in the middle of the box is the average, and it's going from 2008 to 2022, so 15 years of data. You note for July, Kevin, the entire box is above the line, which means every single measure in that 15-year period was positive. 15 years in a row for the Nasdaq 100. It was positive in the month of July. This little blue line that cuts through is the 2022 measure. So where in that seasonal trend did 2022 fall? And for July, it was the absolute maximum, the highest measure we've seen. So buy in July, absolutely alive and well for the NASDAQ. 15 years running. That is absurd. I don't really know what to make of that. Why is that the case?
No, and I mean, to me, technically, I would have assumed that July would not be that way for the NASDAQ. I mean, if we look at the NASDAQ, it's a fairly tech-heavy index that we utilize. I mean, summer's around in North America. The last thing I want to do is, do a whole bunch of tech. I want to be outside and everything else. So I would assume I'm not buying any of these things. But the opposite seems to happen. And you seem to find that, if it's gone down in the months beforehand, which we seem to see on that trend, April seems to be a wide range, then May a little further down, June a little further down. I think that's the recovery scenario. People seem to say that, okay, look, tech is now down at a little bit of a low. They've had that. Let's buy back in, because we know that a lot of these solid companies, the Amazons, the Microsofts, the Apples of the world, they're not going anywhere. All they do is continue to get bigger and bigger going forward. So maybe that has something to play with it. But yeah, you're right. I mean, it is an anomaly when you look at everything else that's out there. And none of them have that sort of just everything's above.
Well, just look at the rest of this plot. I mean, the average line here is the one in the middle. And some are kind of break even, positive, little positive, some negative positive, more of what you'd expect. You wouldn't expect 1 month there's to be dominant. You'd expect kind of a bit of a flip-flop. But like July, every single measure in the last 15 years has been positive. Truly the anomaly in that chart, which is just a little bizarre. But we'll take it as it comes. And we got to chat World Juniors because it's supposed to happen in over the holiday season, which is the commonplace time. That Boxing Day start gets delayed. And it kicked off just recently with a whole host of changes in terms of teams that are participating, the players participating. Lots going on there, Kevin.
Yeah, I mean, it's definitely, I look forward to this every Christmas. That's my sort of scenario between Christmas and New Year's. I sit and I watch the World Juniors and cheer Canada on. But you're right. Because of the pandemic, everything changed. Then you had the war in Russia. So Russia and Belarus, not allowed to compete. IIHF said, we're not allowing them in. So they brought Latvians in. Not only that, but the players that could play were still allowed to. But since you're so close to training camps, you've had a lot of players that have backed out. Canada had to make 9 changes. The Americans have made 6 changes that I know of, that because players opted not to come back. So you've got a very different dynamic going on. I would still say those are still the 2 powerhouses to look at. Not only that, but then you've had the scandal that's gone on sort of with Hockey Canada scenario. So you don't have the same sort of sponsorship and a variety of others. The hockey is still something to watch. Canada, of course, put on a display last night, but it's going to be interesting to see how this works out over the course of the week and whether crowds get bigger and what goes on from there.
Yeah, that's my view. Is I don't know what kind of attendance and what kind of visibility it's going to get because it's in a much different time period, right? People don't think August World Juniors; they think Boxing Day to New Year's Day, right?
Yeah.
That's just been the trend. That's been the marketing. So I don't know how many people are going to tune in. But though McTavish, you got to mention the blowout yesterday they had.
Yes.
He scores 4 goals, ties the record. I think you mentioned earlier Lemieux was another one of the players that got 4 goals in the World Juniors. You can add McTavish to that list because he did it last night. So definitely some exciting hockey. And hopefully we can reclaim gold there in the end.
Yep, that's definitely something to look at. So now we have to go. We have a question, one that's come into us. And of course, it is a hot topic with what we've seen with inflation and interest rates going up. So, Clint, what does somebody want to know from us today?
We get lots of questions on the housing market. This one we had recently. How far will house prices fall? The assumption there, interest rates are going up. We have seen house prices in some markets start to dip. How far is that going to go? I'll let you take the first crack at that, Kevin.
Yeah, I mean, basically, we are going to get a correction. There's no doubt about it. Anytime you get interest rates moving up. Now, if it was a quarter point here, a half point there, I think that would have limited effect. But when you start going, a full point, 75 basis points again, another 75 basis points, now all of a sudden it is substantial for what you can make. I mean, $500,000 in a mortgage may not be the same thing that you can afford anymore going forward. So you're going to get that housing price correction. Now, I would lay odds you're probably looking at that overall somewhere between 10 and 20%. You may get slightly higher in the Toronto, Vancouver market scenarios that had a bigger run. Yeah. But, you start coming across the prairies and you get to, Saskatoon, you get into Winnipeg, you get into some places outside of the GTA in Ontario. You probably won't get as much of a fall. But I do believe that you are going to have some sort of a correction. And maybe 6 months down the road, it turns from a seller's market into a buyer's market.
Very, very possible. Very possible. Now, I don't think you'll see a big crash because, often this question, the context of it is kind of the what happened in the U.S. in the subprime meltdown, that 07 era. And I don't think you're going to see that. It's just simply a different environment. You don't have all the kind of lending of the subprime mortgages, not the case. Right. And also the demographics are definitely in favor of support for the home market. You still have a massive amount of people, all the Gen Z, all the millennials that are buying, right? That are in that age where they're forming families, they want to buy their first house or upgrade their home. And then you have lots of folks coming to Canada. They want somewhere to live. So there's a big demand is what I'm getting at. And that won't disappear overnight. No. So even if we do see a correction, I don't think it'll be a massive crash. And I'll simply highlight the trade-off. You rewind a few months back even, or certainly a year or two back, house prices were too high. People couldn't afford them. Yep. Now you can start to see the prices coming down. The catch is they're coming down because mortgages are more expensive because interest rates went up. So unfortunately, there's always a trade-off, right? It's not going to happen in a vacuum. So they're coming down because debt got more expensive. But if you have a question for us, whether it's on the housing market or anything else, let us know. We're always happy to help out. You can visit the website, chatwithclintonkevin.com. It's part of our website. Fill in the form. We'd love to hear from you, chatwithclintonkevin.com. Any parting words for the folks, Kevin?
No, I think we've covered this week's topics that were hot and they're on everybody's mind. And we will be back again with another back and forth soon, just to ask their questions that you have and let you know what our experiences are for the rest of the world.
Sounds good. Take care.